Good afternoon, everybody. This is Michael with BackToTheFutureTrading.com. It's a pleasure to be here with you all this afternoon. Thank you for coming. We're going to spend some time today looking at predictive times and seeing how that technique could help us look for opportunities in the market today without going too far down the rabbit hole. We're one of the only companies, if not, I believe, the only company, which is, you'll forgive me 1 second, I just need to get something here real quick. Gives out the times in advance where we're expecting markets to move up and down in the future. And that experiment sort of stems from our belief that time is one of the most important factors in determining market movements. And so we invite newcomers to register on the website for our trial. And each week they're given these times and directions that markets are likely to move in the future. And so without really spending too much time in the PowerPoint here today, I wanted to kind of go over 3 aspects of time and then look at what happened through the lens of time today using one of the most popularly traded markets, the E-mini S&P. And so with predictive times, we can remember a couple things. Number one, works on all markets. Number two, works on all time frames. Number three, let's really blow it up for those of us who are ocularly challenged. Number three, all times have an associated pattern. We'll talk about 1, 2, 4, 5, 6, 7, 8, and 9 in your book. And then number 4, all patterns can be traded mechanically. And so part of the benefits of using time signals are, number one, the times are predictable, meaning they're leading. We know when they're coming in the future. We're not surprised when we get there. If everyone says plan your trade and trade your plan, what do you think is easier to do? Plan when something's happening right now or plan beforehand? And so number one, it's leading. So we're relaxed and ready. Number two, your stops end up being smaller over time because the trade either works now or not. So your stops are necessarily smaller because, hey, the trade either works now or it doesn't. Number three, your runners actually run because we know how long the trade has to go, time-wise. Number four, we don't overtrade because we know the number of setups every day. And those are the primary benefits of using our program, which address the primary problems most people have when they trade. You're reacting to the market. And when you're reacting to something, unless you're a superhuman robot, cybernetic, emotionless automaton, it's really hard to do. When you know the trade is happening, your stops are ready before the trade even sets up. You know where your risk is supposed to be. And we'll go over that here in a moment. Number three, when your trade actually gets in here, and you'll see a couple examples today, you know how long to hold it. There is an expiration date associated with these trades, whether it's a daily chart with an options trade or a swing trade in gold or oil. You've got calls or puts in NVIDIA or AMD, whatever you're doing, you know how long it is until the next trade because we're working with time. Okay, so these are the times that we gave out on Tuesday. And I think that's important to make note of. These times and directions were known since Tuesday if you were taking our trial. All right? So this chart was blank when today started. The bottom part of the chart was here, in the same sense that we have the times for tomorrow right now waiting for us in the future. They're sitting out here just waiting for us to act on them tomorrow. So today, there were no signals, or rather, there were no price bars here. There were just signals on the bottom of the chart. So earlier, you saw me tell you that we had given out the times for yesterday and today for popularly traded markets like the E-mini S&P, oil futures, gold, the DAX, euro currency, the Dow, E-mini NASDAQ, euro dollar, Ethereum. All of these things can be analyzed, and when we project those times into the future, there's an expectation that something is going to happen at each of these moments. The times are really holy in a revered sense. They're established lately. There's a behavior pattern associated with them. Something is expected to happen when we arrive at these times. Now, historically, any of these times on the bottom are usually buy signals. Times where we're waiting for a time that usually produces an up move. All the signals above the zero line are established behavior patterns where historically we're waiting for a sell move. Does that make sense, everybody? Everyone on board so far? And so the big question that sort of remains is, well, what do we do when we get to the times? Well, that's where the second part of this kicks in, and that relates to patterns. Every week that you come here, there's a histogram guidebook in the handout. It hasn't changed much in the years since I first put it out. You can see here, first written 7 years ago, a little under 7 years. And the first thing that I try to remind everybody to do when they're watching these times, don't panic. Don't panic. Well, 70% of the time, when we arrive at the buying pressure signals, the market goes up, or we're expecting it to go up. We call that a pattern one. And then 70% of the time, a sell signal usually produces a sell signal, where it's just an expectation that the market will drop. And so regular buys and sells, we assume every one of these times will be a regular buy on sell, unless something very special sets up for one of them. For example, if we arrive at any one of the blue times, any one of the selling pressure times, And that time, that signal candle, either the candle to the right or the left, if any one of those three amigos are a new structural low in relation to a prior swing, historically, those patterns tend to invert and go backwards. So the time we were waiting for a sell behaves like a buy. So as we get closer and closer to these times, there are some that may just go in the exact opposite direction. How many of you have encountered those types of setups, either in the trial or as a customer? A sell signal that goes up, a buy signal that goes down. This is one of the quirks in the operating system of time. And of course, on the buy side of things, if we arrive at a brand new high at a buying time, and either that candle, the one to the left or the right, is a brand new structural high, it tends to revert and go down. And so what we're going to do is we're going to look at the third part of this, which is the setup. How do we trade these things? How do we trade these times when we sort of arrive at them? Let's look at it from the European Open, because some of you are here from that side of things in through the US session. And I want you to see how different it is, how easier it is when you know what to expect, what to actually do. So we have the times all the way through 3:15. The Asian session will start at the Europe session, 5:20 a.m. Eastern time. All the times on my computer are in Eastern time. They'll appear relative to your computer's clock when you install it on your machine. We're using a 120 period exponential moving average. Now, I've already mentioned this when you took the trial that we'd be doing that. Signal with trend, puncture trade. The video describes what moving average we're using and how big of a stop we're going to use. So everything I'm showing you was already in place before you got these times and before the markets opened on Wednesday or Thursday. So we're just reviewing right now. When we got to 5:20, the signal was above the moving average. Now this gap right here from the low of that candle to this dotted white line is equivalent to 1.5 average true ranges. ATR is being calculated, and then we add 50% of that to this line. Does it have to be that big? No. That's what she said. You can make it 1 ATR, 1.25 ATR, 0.5 ATR. We have found that 1.5 average true range values away from the candle is a reasonable stop level. It's 1 bar away from the candle plus a little bit more. We're going to enter on the close of these candles. Here's our stop. Here's our entry. Now here's the cool part about using a time signal that none of you have if you don't have the program. I watch how many of other customers are trading, how many other vendors are teaching their knucklehead students how to use their proprietary black box garbage pail. And they'll throw 5,000 Fibonacci levels on the screen, and they'll use specialized Renko bars that only they have. And there's 101 ways to interpret it unless you're part of their live action room, usually chaired by someone with a Russian or British accent, because it makes it sound more authoritative to an American. All the tricks, all the tricks of the trade can be deployed. If you ever want to make $1 million, I can tell you how to open a trade room. All you have to do is abandon all sense of morality in your conscience, and you'll be rich. It's very easy to open a trading room. But here, the rules were very simple. We enter on the close of the candle. Our stop is here. But we know before we've even started playing the game that the song runs out 5 minutes and 55 seconds into, or at 5:55 rather. So if I play one of my favorite songs, it's a little indie song by an artist named Bernhoft. It's 3 minutes and 50 seconds from the beginning of this song until the end of this song. I know before I press play that there's 3 minutes and 50 seconds in this song. And so I know when I get into this trade at 520, there's 35 minutes for me to be involved. And then historically, for whatever reason or another, the banks, the institutions, the people who rig this market usually sell off or take profit at that time. It's the only reason why this time and this time is here. It's not black box. It's a behavior pattern that the software uncovers. Why is this important? Because humans are victims of something called the recency effect. You don't remember when you sit down to trade that someone's been pushing the price up on Thursdays at 520. You don't remember that they take profit at 555. You remember what happened 30 seconds, 30 minutes ago. The recency effect is the tendency to remember the most recently presented information best. For example, if you are trying to memorize a list of items, the recency effect means you are more likely to recall the items from the list that you studied last. And so institutions, banks, greedy bankers, whatever you want to associate these movements with, right? This guy is hoping you forget what times their algorithms are programmed to do these things, right? These guys are hoping you don't remember 520. You don't remember 940. You don't remember 1105. And so this program is sort of it's not an AI, but it's a cyber assistant, if you will, who remembers everything. It's like a wife. Careful, careful. Anyway, we enter on the close of the candle. We exit by 555. We walk away with an entire tick. Ooh. Now watch. We're going to do signals with trend first. At 650, when that candle closes, it matches our description from the book. It says, hey, this is the mechanical definition of what you told me to do. And so to make things easy, in the book, I tell you how to trade it. Exactly, Earl. So in the book, if we're trading with the trend, which is what we said in the demo page for the trial takers, what are we going to do? Just use a breakout threshold above the highest high of the 3 candle series. I recommend at least a 2-tick gap to use as a trend continuation level. So if there's a pattern 5, we wait for all 3 candles to go by, and then we put a buy stop 2 ticks above the highest high of the 5. Our stop then goes below whatever candle punctures that level. So a pattern 5 has reversal tendencies. It's bipolar. It's bigender. It's confused. Am I a buy or a sell signal? Yes. In many cases, it will pull back before it goes through. And so when it goes through, we enter just on the other side of that high, and our stop goes underneath the candle that punctured that level. Well, how long do we hold it for? Until the next sell time. It's in the book. We knew it before this market opened today. So the third candle goes by. Yes, Thomas, but don't say it out loud ever. So the high of that candle is 358.25. So we're going to do 358.75. So we're entering right here. Buy stop. Boom. Where's our stop go? 2 ticks under the candle which punctured. So our stop is right here. How long are we holding the trade? Until 7:40. When everything is based on time, you start to figure out that the rules you were told markets obey are not really the rules. You're kind of feeling at a visceral level that you're playing Monopoly, but when they give you the rules for the game, there's just chutes and ladders pictures. It's just Candyland. There's no reference to hotels or rent or get out of jail free cards. And when you use these time signals, you start to go, whoa, wait a minute. There's this whole ecosystem of rigged movements that no one ever told me about. And so now when we're looking at this 650 entry, we're entering right here. And now we know exactly how long. For good, bad, indifferent, we're holding this until 7:40 for $4.25. Now, what happens at 7:40 for 5, 10, 15, 20, 25 minutes? Do you notice, everybody, how the train stops right here? What are they doing at 7:40? They're taking profit here and here and here and here and here. People are selling into this move. Now, the point I want to make about that relates to the book we started out with. This is a pretty important book, if you haven't figured out yet. If we're in an uptrend, look, a selling pressure time in an uptrend can look a little different. Will it drop like a rock when there's a strong uptrend? It can, but usually it does something different. I like to use a good analogy. Imagine your house is on fire, or the neighbor, if you don't like their house, is on fire. You rush over to help and turn on their tiny garden hose. It might stop the fire from spreading for a few minutes, but not for long. Same thing here. Banks sell into uptrends and price stops rising or rising as quickly. Sometimes after 3 or 4 bars, prices will break out and keep rising. Market nerds call these reaccumulation phases. And you can see on this chart from 7 years ago, in an uptrend, when we arrive at a selling pressure signal, Thomas, it just kind of slows down. Does that make sense, everybody? Mary, does that make sense? We're not necessarily looking for a reversal in an uptrend at that point. It's a great place to take profit, though. No, you didn't, Thomas. Liar. If you did, congratulations. So now at 8:20, it goes, hey, buddy, we made a brand new high on candle number 1 and candle number 3. So we have to buy a breakout right here. And if we buy the breakout, the stop goes 2 ticks underneath the breakout candle. The low of that candle is 364.75. 364.75, so 364.25 is going to be the low. 364.25 is down here. So we don't hit that stop. We come awfully close to it. We don't hit it. The low of this candle, 364.50, missed it by a tick. So we enter at the puncture right here, and then we exit right there. Negative a quarter. Now, this one hurts my heart because at 8:50, it's a counter trend trade. It's a counter trend trade. And it hurts me because I can't short it here, 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 or here, or here, or here. It's only when this candle closes below the moving average that I have permission to take a trend trade. But if you're watching from home, 8:50, we fall from here all the way to here, $21. And we knew that. That time was available to us since Tuesday if you're taking a trial, right? These guys, before the report came out, they had a plan. And they weren't sharing their plan with anybody. They were doing their thing and letting everyone else get run off today. So far, so good. Everybody okay so far? All right. There's a second version of a signal with trend that we need to account for that I talk about every week. One is a signal with trend. The other is called a puncture trade. A puncture trade. Well, what's a puncture trade? Well, I'm glad you asked. When we have a signal in the direction of the trend, we're watching for failures with trend. So for example, in this setup, the trend is up. The 930 signal is telling us historically, prices either go sideways here or drop. That's the only reason this 930 signal appears. Well, the trend line is telling a different story. It's lagging, admittedly, but it's rising. And so we want to be in that number when the saints go marching in. So what we've learned in the earliest phases of our understanding of time is that a failure of the 930 signal is a powerful message. It means, in essence, hey, the sellers that were normally here are gone. The banks, the institutions, the algorithms that are normally firing off to the downside, there's nobody here in this warehouse. We opened all the doors, turned all the lights on, and there's nobody here. All the sellers that used to occupy 930 and control things for a while, they're gone. Well, what does that give us permission to do? If all the sellers that are normally here aren't defending that stop level. That's right. We can actually buy, just like we buy a pattern 5 puncture, a breakout. There are no sellers defending this line. It's probably going to keep going higher until the next time window starts. Okay? That's a puncture. Well, when we come back over to this chart, remember we were starting at 520. Let's just look and see if there were any punctures. There were. Before the 650 candle closed, we broke through this line. We're right on the bleeding edge of that signal. However, this candle opens, it goes through the line, and we finish here. That's a puncture with 5 minutes to go. That's a puncture. And our stop would have gone just underneath the puncture candle. Who can see the next one? That's right, right here. There's a puncture as it comes through that blue line. The profit taking is over, the trend is continuing. Our stop goes what? 2 ticks under this level. 1, 2. Unfortunately for this trade, it goes in our direction about a point before it finishes against us, 2 ticks. So there were 2 punctures on the way up, sort of break even. But now, there are no buyers here. That's not true. At 940, Thomas, look, people are taking profit here and here. They're covering those shorts. Our book accounts for this. A pattern 1 in a downtrend tends to look like this. The market slows down. The market slows down. It's that fire hose example we were talking about earlier. And so right here, right on time, there's a 5-minute doji. I want you to think about that. Down, 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 down. Stop. That's weird, but it's proof that the market had buyers coming in at 940. Now, what does our book account for? A puncture. Resulting moves at punctures are typically short bursts, but can sometimes result in downtrend continuation. Okay, well, I'm a seller right there. My stop is right here. How long am I short for? Until the next time. Well, I don't know the next time. Yeah, you do. You've known about it. It goes from 940 until 11:05. That's the next time. So you're not inclined to get out too early. You're not inclined to get out until 11:05. So you're holding it this entire time until 11:05. So if we log that trade, we're short right here until the close of the 11:05 candle. That's a $14 winner by 11 o'clock. So here's where we are from the London Open until 11:05. Now, what number is 11:05? What does the software identify as that candle closes? What is it telling us is likely to happen here at 11:05? Can you see that? I'll blow it up. That's what she said. To number 4. Remember, the times are important. If the times weren't important, the software would not bring them to our attention. It's not going to invade our space, our mental thought process, unless those times are meaningful. Hey, this is a pattern 4. What do I do with a pattern 4? If only there was someone in the world who understood what pattern 4s do and how they behave. There's a page in your book. How do I trade it? Well, historically, they tend to reverse and go up. So if you're a counter trend trader, put your stop underneath those candles and go long. If you're a bottom hunter, if you're trading VWAP levels and standard deviations from the mean, Bollinger Bands, Keltner channels, stop and reverse signals, divergence signals, this is your stop. Everybody off. But if you're a trend trader, we have to wait for it to puncture that low and continue down. Well, fun fact today, it didn't go down. It did what a pattern in a 7-year-old book told us might happen. Isn't that bananas? Are you not as amazed? Is this thing on? This is insanity, isn't it? That time existed on a screenshot since Tuesday. Memorial Day weekend is coming. Big news. At 11:05, if you wanted to go long, 320 up to 342, that's another 22 points on the vine. Okay, let's keep going. So no trade with trend. There is a third setup that I haven't added to the book yet, and I would be remiss if I didn't mention it to you. And I want you guys to explore this. If you have a counter trend signal and it's a sell signal like this, Thomas, and let's just say for poops and giggles, it's a high close candle like this. Do me a favor, even if it's in sim, put your stop right above that candle and short it. I call this, I forget the name, it was a pretty catchy name. It's basically a low risk counter trend trade. Use a very small stop to test to see if this thing is going to turn into a big move. I've mentioned it in my webinars in the past. It's not in the book, so I can't put it in our tally here today. But you'll see in the case of the 850 signal, Thomas, the high of that move is right there. Right? So the high of that candle is 367.25. Put a stop right above it, and please short it. Sometimes it's not going to work. For example, over here, you would have been stopped out. If you tried to short this one, it would have gone 5 ticks. Woohoo! I don't go to break even on the ES until 8 ticks, 6 to 8 ticks. But you would have been stopped out here. Two ticks, 1 tick, 2 ticks. Let's say 2 ticks. But now, if you shorted this candle and just put your fingers in the water, do you understand what we're talking about here? Watch, it's counter trend, low risk counter trend, and now I'm out with $21. Let's go ahead and give these a different color. This one is a stop out also. Let's make it yellow. Low risk counter trend. If we did the same thing over here, put a stop just underneath the green dot, the buy signal, you lose $1.25. And now here comes the pattern 4. The stop is bigger on this one, obviously. The candle closes, and you end up with $9.50. While you're waiting for the trend continuation. Here's the same execution. Counter trend signal. The stop goes below that candle. You enter at the close of the candle. That candle is up $7.50 before coming back down. I'm going to call that a break-even trade, if that's okay with you guys. We'll lock in 1 tick. If you're up $350 on the ES and you didn't go to break even, you're going to get a lot of hard knock lessons. This is now a puncture trade. As soon as it comes through this blue line, we are short. We tried it as a low risk counter trend, and now we are in a puncture trend. Remember, we knew when these signals are coming. We know what the times are. We know what to do when we get there. Our risk is right above this candle. Matter of fact, we'll put it here. And we're going to hold it until 110. There's 110. From here to here, plus $2.75. Okay, 110 comes. Second candle, low risk counter trend trade, and I'm stopped out. Not only am I stopped out, I'm re-entering. So I'm trying for a long here. I enter long. The market goes $4.75 in my direction. I'm stopped out, but then I reverse. With a pattern 4, it can do both things. The book says if you want to try a long here, you can. But if we're trading with trend, put your sell stop 2 ticks under the lowest low of the 3 candles. Candle number 1, candle number 2, candle number 3, the lowest low is at 319.50. That means we're short at 319. We punctured 319 and now we drop until what? Let's make sure we are accurate with that stop level. That's a winner. And then the low risk counter trend trade, we buy here and we're taking out -2. So minus 1.5, -2. And now here comes the puncture trade. Our stop goes above the puncture candle. We're holding it until 2 o'clock. We're entering here and getting out there. Pattern 4 trend continuation based completely on time. There's $25.50. Everybody good so far? If you're an Omnia trader, this is another rapid deceleration buy dot. We talk about these in the live advanced training room. You know what to do if you saw that. Can't bring it up here. Next signal is a buy signal, low risk counter trend. I put my stop right underneath it. My stop is hit. Does not go in my direction. I take my lumps. I lose $3.25. The candle is punctured right here through the white line. I'm looking for a failure with trend. My stop is above the puncture candle, and I'm going to hold it now until 340. So this trade, how far does it go in my direction? Only $8.50. So I'm going to call this one break even. It comes all the way back up to here. And then 340, if you're crazy enough to get in there, as of right now, you're pretty much break even, right? Or if you held it until the very last tick of the day, right, you finish where you start. So these are all the signals from this morning to today. All right, we can put our losers down here so we can see the trades that lost down below. We can put our winning trades up top, just using the signals in the book, the trading plan that we have from the book. 1, 5 and a half, 19 plus 3 is 21 plus 25 is 46. So $46 minus 44, 40. So we'll call this a total, heck, with all the slippage and commission, let's call it a total of $35 times $50 per contract. Let's call it an even $1,500 per contract in one day. Just taking the signals from the book. If we trade the LRCTs, the low risk counter trends, in addition, that's 21, 31, 29, 26, 24, 23, $23 from the low risk counter trends equals about $1,000 per contract in one day. So whatever it is, if my math is flawed, you made more money than you lost using times that were produced beforehand. I can't find my my forecast page. Maybe it's over here. No. And so it's not exclusive to this market. Yeah, Michael, I'll go over it one more time. Sure. If you have a signal, let me find another day that we haven't looked at yet. If you have a signal like 940, the stop is here. The close of the candle is here. Put your, I'm sorry, the top is there. The entry is here. Put your stop 2 ticks above it. 1, 2. And try to go short. Here it would hit the stop. If this is a low risk counter trend trade, put your stop just above this candle and try to short it here, and you'll get taken out. Same thing over here. Try to go short right here against the trend, but use a very tight stop. The bulk of your winners are going to come from your trend trades in this model. Does that make sense? Let me go back on another day. Give it a shot. If it's a couple ticks, like this signal here at 825, you see that? Michael, put your stop right above that candle. That signal went 216, 249, 25 points. Give it a shot. Anyway, just looking at where we had told people that selling moves were expected to come a couple days ago. It's kind of neat. And so it's not just that market. If you're trading the NQ, I want to just show you real quick. These are the signals on the 1 minute NQ that people have had since Tuesday. Short 1251, short 114, short 133, short 146, short 2 o'clock, short 225, short 223, and so on. You know the times in advance, and as we move to the right in the future, you can see the times are coming up. No one else has this. No one else can do this because no one else is honest about what this is and what the rules really are. Let's use the daily settings on AMD. And you'll see here that the same thing works. We have the same kinds of signals on the daily chart for AMD. If you're an options trader, the next signal is a sell signal tomorrow on the 24th into the weekend. The next buy signal for AMD on a daily chart is Monday, June 24th. There's a sell-off now from the 24th until the 24th. Microsoft on a daily chart looks the same as a 5-minute E-mini S&P chart. Let's look at Tesla. Womp womp. Tesla on a daily chart looks like the E-mini S&P on a 5-minute chart. And I can see the dates that are coming up. The next put is May 28th. The next put after that, June 6th. The next put after that is June 11th. No other software can do this because nobody wants you to remember that these patterns are recurring over and over again. NVIDIA. Could you have made money trading NVIDIA using these signals? Could you have made money trading NVIDIA using the method that I taught you here today? Get out by May 31st. When was the buy signal? We've known about it for months. May 22nd. Look at the right. There's the times coming up. You don't have that. You can have it. Do you understand how insane it is? I come here every week. I come here every week, fully aware that most of the people who watch this webinar prefer being blindfolded in the dark and completely surprised when these moves in the market come. They're like, I don't want to know. I don't want to know. I like not knowing. You know, I trade the NQ and I use 1,000 lagging indicators and I'm always getting stopped out. It's so much fun. Would you like to have the times? Nah. The buy signal is only valid once it breaks the short signal? No, the buy signal is valid at the buy signal, George. Close of the candle. Everything I said. Did you hear anything I said? Close of the candle. 1.5 ATR stop. When do we hold it till? Until May 31st. Close of the candle. April 24th. 1.5 ATR stop. When do we hold it till? May 6th. What happens to a sell signal in an uptrend? It goes sideways for a while and then it breaks out. Oh, it's okay. Don't come late. I put a lot of work into these things. It's disheartening. It's disheartening when week after week people go, I like not knowing. I would rather use my stupid piece of crap thing. Isn't it fun losing money? Hang on, I'll come to a webinar. I'll look for one. I'll look for 1 week and then I'll go back to not knowing anymore. I like not knowing. It's disheartening. Every week for 15 years, I come in and I try to convince people that this is real. Customers who can write whatever they want about us. Real people with real receipts. They come in and they say, hey, I've been studying this for 2.5 years. I feel like the applications provided by this company have been the missing link. And on and on and on and on and on. And people still say, I like not knowing. We can look at other markets too, where we were waiting for the times to occur. Sorry, got a little grumpy there for a minute. Here were the times that oil was supposed to go up and down today. Could you have made money trading oil today? George, if you're going to come into a webinar 10 minutes before it's over, I just sort of reserve the right to not answer those questions for stuff we covered earlier, right? I don't want to be disrespectful to you, but you got to also meet me halfway. The 30 people who've been here for the full hour, I can't go back and take away the time they've invested to answer questions I've already covered earlier on. So I'm sorry. These were the times we were waiting for oil. If you were buying oil futures in the direction of the trend today using the times, you're long from 403 to 418 plus 21. You're long from 451 to 515. You're long at the puncture until 603. You're long from 603 until 727. You're long from 821 until 848. You're long at the puncture until 927. You're long from 927 until 936. This is the first time you lose money. You trade short now below the moving average until 1042. You trade the puncture and you're stopped out. You trade short from 1109 until 1142. You see how it's all winner, 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 winner. Gold. Do the same thing on a 5-minute chart with the times that we gave you 2 days ago. Could you have made money trading gold with the times that I gave you in advance? Did you see how they had a plan in place before we got there? And again, if you go by my website stats, 95% of people who hear about this, who learn about it, who see it demonstrated live, leave without the program, completely satisfied, continuing to do things the way they always did it, continuing to lose money week after week, month after month, year after year, having to face the people that they promised would be different this time, answering to their spouse, answering to their loved ones, to their partners, to their friends. Bill, what are you doing, man? You making money trading yet? No, I saw this real crazy webinar though. Guy said he could predict the future. Had a 4.7 out of 5 rating. Did you get it? No. I like doing what I'm doing. Maybe next year. Trading is about understanding what should happen in the future. If you know when the move is coming and how long it's supposed to move in a direction, you can place calls, you can place puts, you can buy, you can short. There's a window of time based on a behavior pattern predicting the future. Anything else you're looking at is lagging. It's in the past or it just happened. It's not a future signal. It has no bearing on what will happen next. It's what happened now. The best you can do is look at what just happened. That's not trading. Trading is estimating where we'll be 30 seconds, 30 minutes, 30 hours, 30 days from now. And again, every 100 people who see this, who see the proof, who see the results, who see the profit, who see their testimonials, they leave and continue to self-sabotage, do things the way they always did it, refusing to play the game with monopoly rules, happy and content to pretend it's chutes and ladders. Okay, I got some good news and some bad news. The good news is that you can have this. The good news is there's all sorts of ways to get into it and learn it and use it. By the way, that Mr. Potato Head looking guy, that's me right there. General announcement. This is the last week this price will exist. Starting in June, this will be $29.95. Today, you have a promo code that you can use, which will take $500 off of the price. This is real, I'm not lying. Truth. When you click the Buy Now button, there is an advanced trading room. I run it. I'm one of the founding members here. 2 of us started this thing 15 years ago. I show the program being used in real time in real markets. If you want to be involved with that, there's a subscription every month. I have a $200 daily goal per contract. We hit that today in the first 30 minutes of the market. If you don't want it, don't get it. But I wanted you to see there's a promo code place. This is the last place this code exists, WARPOFF. It's been around forever. We haven't raised our prices like McDonald's or Toyota or your real estate agent. It has been the same price for years and years and years. And if you put that promo code in there, WARPOFF, lowercase, no spaces, it will take the $500 off and you will get it. You will be one of the last people in the history of this company to pay $19.95. June 1st, no mas. The accountant yelled at us the other day, and honestly, a little scared of him. This comes with a room. There are 259 people in our community of users right now who are sharing their settings and their charts and their ideas and their questions with each other. If you don't like Skype, I'm sorry. We use it, and it's really good. I monitor it all day as people have questions. You can see I answer them in real time. Customers are sharing their signals with each other, their templates with each other, their settings with each other, their ideas with each other. There's 300, close to 300 people in there now if you're involved. This is 2 computer licenses for NinjaTrader. It's a lifetime update as of now. We're going to start charging an annual update subscription for people who want to get in on the latest and greatest changes. About 2 or 3 times a year, we will make big changes to the program. Futures, forex, equities, crypto, commodities, whatever you have a data feed for, this will work and allow you to see everything from 30-second time frames up to daily, weekly. I think I ran a monthly chart once for big swings. So if you say, I don't trade 1 minute or 3 minute charts, it's fine. About a quarter of the customers don't either. They trade longer term swing trades and options with the program, and they're doing really well. So you'll be in good company. Yeah, Evan, for sure. Evan says, I got my program this week. I'm going through the training and my mind is blown away. It's pretty cool stuff. So that's there if you want it. If you don't want it, if you're part of the 95% of people who say, I'm going to go it alone, be careful. Be careful. A lot of those people come back years later and say, I should have got it when I could. Michael, right after your webinar, I had the biggest loss of my career. Blew out my account. My wife said, enough's enough. Lost the kids' college fund, lost grandma's inheritance money, can't pay my mortgage. Now I got 5 jobs. It's pretty sad out there. But then you encourage me, those of you here who are customers, you share your results. Thomas told us, he just now said, I qualified for my next Apex account. He passed his combine. He's moving on to the funding stage. Those little notes of encouragement, your testimonies on the Trustpilot page, you give us the motivation to continue to develop and engineer these tools. I don't, Evan, but I'll keep that in mind. Everyone have a great long weekend this weekend. It's been a really great year so far. We've learned a lot about time signals. We've helped a lot of people, but there are millions more coming online, millions of young people, retirees. They're Bitcoin rich or retirement liquid, and they're losing money every day. They're playing Monopoly with Candyland rules. They have no idea this stuff is out there. Please share with people you know that are trading in other forums. Please let them know there's a better way. And thank you for supporting us, because it helps us get the word out to them and protect them from the vulture vendors out there who are selling garbage in a shiny can. May the wind be at your backs. May the sun shine upon all of our collective faces. May the mountains lay low before us and the valleys rise up to meet us on our journey. I see darker times ahead in the near future. I think some of you can feel it too. Wherever you stand on whichever side of whatever aisle, I think we all collectively sense the timing is shifting. And we're going to need each other. The volatility is back. We've been predicting this down move now for a couple days. We finally arrived here. It's only going to get, I think, these types of days are going to become more and more normal in the immediate future. We need each other. Be the light in the world. Be kind, be gracious, be hopeful, but be on guard. Keep your money, keep your risk tight, let your winners run, use these signals to help you do that. And God bless each of us here today as we try to take what the banks took from us back, one tick at a time. I love you guys. I'll see you next week. Have a great long weekend. To the customers, I'll see you in my live room on Tuesday. Remember, the market you trade is not random. We can use data mining tools like Warp to find the times in the future where longs and shorts, calls and puts can be taken, small stops, large targets, predictive signals. Have a great weekend, everybody. Take care. Bye-bye.